Welcome to today's market recap, and thanks for joining. In today's session, I will demonstrate a swing trading technique that you can use in any market condition to identify truly high probability and low risk 360 degrees trades. I will use only one trading system for the complete analysis, Q. It runs on Metastock and TradeStation platforms. Q has multiple components covering market, sector industry rotation, fundamental, technical, and even seasonality analysis, all done in 100% real time. I will use several of them today. Q was designed by Sagar Nandi, an active trader in multiple markets. You can learn more about Q systems from the Learn page on the website superiorprofit.co. For your queries, you may use the email ID tradingprofitably@gmail.com. Follow me on X handle Superior Profit for live market and stock analyses, all shared before knowing the results. And visit and subscribe to the YouTube channel Trading Profitably to watch detailed market recap, masterclass, and many other videos. Disclaimer: this demonstration is for educational purposes only. Sagar Nandi, or superiorprofit.co are not investment advisors. Nothing in this presentation is a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. Now, I will use Q systems to carry out market analysis across 5 distinct non-overlapping dimensions. If all the dimensions are aligned, say bullish, the decision is easy. That is the preferred trading direction. If the dimensions are showing divergent insights, you may do one of two things. Either stand aside or swing trade in both bullish and bearish directions in different stocks. Which option to choose depends on balance of evidence from the dimensions. If you are not sure, you can always stand aside. Once I derive the preferred trading direction, I may look for high probability and low-risk trade candidates in that direction. First dimension of our analysis is to look at two instruments, US dollar and Mega Cap Custom Index, that have tremendous influence on the market. US dollar tends to be inversely correlated with the market, though sometimes that inverse correlation does not work. Mega Cap Custom Index is directly correlated with the market, and that correlation always works, with more impact on some pockets of the market than others. Dollar Index. It is below the yellow and white direction lines, and it is also below the 50-day and 200-day moving averages. However, in the last market recap when we were here, looking at the false downside breakout, at the watermark support, I expressed my bullish view on dollar index. That came true. This week dollar index went up. What is my view now? It is already significantly above the recent swing low, and it is in a downtrend. Therefore, I am not bullish anymore on dollar index. It can go up, but based on Q analysis, I'm not going to buy. I'm not going to short as well. Mega Cap Custom Index. In the last market recap I showed, it was inside a range, and the range was created by trend line resistance at the top, trend line support at the bottom, and it was at the upper edge of the range, where bearish indecision cluster had come. Looking at that, I expressed my bearish view on Mega Cap Index, and I even mentioned that if it came down, I would not mind shorting. That analysis was very useful. This week, price came down. What is my view now? Now it is right at the support. At the bottom, now we have bullish indecision cluster. The candle color is still bearish, red or magenta in daily and weekly respectively. It is not allowing me to buy now. However, if it can go up from here, I would not mind looking for low-risk buy points in some of the mega cap stocks. Notice also that it found support at the white direction line and the 200-day moving averages. That is also supporting the idea of looking for low-risk buy setups if MegaCap Custom Index can go up next week. Second dimension of our analysis is using Q market breadth, internal health check. Usually, the market follows the internal health, not the other way around. Market breadth, internal health check. I have already posted the market breadth charts on my X handle, Superior Profit. Let me use those. Total view, the broadest view of the market. The first thing to note is that there is a Eureka signal shown by the candle color. What is Eureka? It is equivalent to Cairns-Lim's follow-through day. It was invented by Mr. Ian Woodward. May him rest in peace. Eureka can be a buy signal if it comes after a pullback. But in this case, Eureka is coming. At the very top, that is probably more a sign of irrational exuberance than a buy signal. And of course, we have the ominous signal from 8 Hindenburg omens in a row, all confirmed. Together, they are telling us to be cautious, though the market is looking bullish externally. The Hindenburg, as you know, can be read as a signal. Where amateurs like me are buying and professionals are selling, it usually comes at or near the top, and 8 of them in a row is telling that caution is warranted. Drilling down from total view to NASDAQ and NYC breadth, majority of the Hindenburg omens came from NASDAQ, but it came in NYC as well. The Eureka came in NASDAQ. On the other hand, 3-month new high-low is nearing extremely overbought condition. In NYSE, all these are telling that caution is warranted. If we further drill down into the major indexes, the 3-month new high-low in small cap, and also that in mid-cap are nearing extremely overbought conditions, and the recent rally was triggered by small cap and mid-caps more than by mega caps and large caps. You can see that because for S&P 500 large cap and NASDAQ 100, most influenced by mega caps, for them, the 3-month new high-low is quite a distance away from being extremely overbought. So the rally was triggered by small caps and mid caps, and they are hitting extremely overbought condition. That is a reason for concern. At the same time, there is a possibility that mega caps will now start to go up. We saw that possibility from mega cap custom index chart as well. Third dimension, market external view. This is how most people around the globe see the market. This analysis can be done using market ETFs, futures, or indexes. I will carry out this analysis using Q at a glance weekly daily charts. SPY. It is above the yellow direction line and also above the 50-day moving average. Far above the white direction line and 200-day moving averages. Certainly not bearish. Also, Friday's candle color is bullish. Is it allowing us to buy? Not really. Why? Because the weekly candle color is bearish for 4 weeks in a row. On top of that, we have bearish indecision cluster at the top. Those are in fact telling that if price goes down from here, we may look to short. However, daily is cautioning against shorting right now. It is inside a box pattern in a sideways move. It's not allowing us to short. If price can break down below the sideways range, that will certainly give us enough reasons to look for shorts. Right now, it is not allowing us to buy. It is not allowing us to short as well. QQQ. It is weaker than SPY. QQQ is below the yellow direction line and also below the 50-day moving average. Weekly backdrop color is bearish. Relative performance is sharply tilting down, showing it is underperforming the market. In the daily, though, it is inside a range. It tried to go below the sideways range, but recovered on Friday. It is near the middle of the range that does not allow us to buy or short, because it is weaker than SPY. If it can break down below the sideways range, that will give Probably many shorting opportunities. Right now, I would prefer to stand aside. DIA. It was also inside a range created by trendline resistance and support. However, on Friday, it broke out with high volume and bullish pressure and U-turn. Weekly backdrop color is bullish. Shape is bullish. Friday's move was associated with a huge 5D force count and 4 bullish momentum signals. That was a very bullish move. However, it is overbought as seen from the jump thrust high indicator. It is outperforming the market. It is the strongest pocket of the market. Clearly bullish. However, it is overbought. I would not like to buy it right now. IWM? This is also outperforming the market. Weekly backdrop color and shape both are bullish. Has trendline support in weekly. In daily, we have a flow signal and, in fact, a trend-following flow buy setup. It is not overbought. In terms of jump thrust, it went up with a huge 5 count of direction force and 3 count of bullish momentum signals. This is where I would not mind looking for a buy setup. Our fourth dimension analysis is about sector industry stock breadth using Q-Edge. It shows the sector industry scorecard in real time and allows easy drill down to strong fundamental stocks. It also has bucket analysis, which pinpoints reversals with remarkable accuracy. Bucket analysis. A huge 27.8% of stocks in Q-Edge, that is S&P 1500 stocks. A nice mix of large cap, mid cap, and small cap stocks are above the upper Bollinger Band. That is reaching the overbought condition where I would be cautious about buying. It is not a sell signal, but if it starts to come down from there and the sector industry stock breadth turn bearish, that may be a time to look for short setups in overbought stocks, but not yet. Sector industry stock breadth. All the periods are bullish. 1 month and 10-day longer-term periods are bullish. Medium term, this week, 5-day period, bullish. And even 2-day and 1-day periods are bullish. Not only that, from longer term to short term, the bullishness is staying the same or even increasing. This is looking slightly overbought, but it is clearly bullish. This does not allow shorting. One may be cautious about buying. The fifth and last dimension of our market level analysis is technical breadth using Q-Finder. Most of our trades are directional trades. For such trades, we profit by buying stocks going up or shorting stocks coming down. Technical breadth helps by showing the overall posture to adopt bullish or bearish and allows easy drill down to find low-risk trade candidates in that direction. Weekly technical breadth, it is bullish. It is also bullish for the 3 individual categories. This allows buying, does not allow shorting. Daily technical breadth, it paints multiple pictures. It is bullish overall and also bullish across all the 3 individual categories. It's not only bullish, it is overbought because all the categories are bullish by more than 80%. That is true even for the momentum signals. Bullish and overbought. What else we can read from here? If we look at the jump thrust alert, that is also saying that too many stocks are at an unsustainable high price level. These overbought situations are telling to avoid buying stocks. I told this picture has 2 stories. What is the other story? The other story is coming from bullish headwind alert. That is telling that there are stocks at a very low price level starting to go up. Those can give reversal buy setups. So there are 2 stories that can be read from this daily technical breadth. One is avoid buying stocks that are extremely overbought. The other is that it is okay to look for buy setups in stocks that are at a low price level. That is stocks that were underperforming, which means some kind of rotation is probably going on. Based on the analysis of the 5 dimensions, we are now ready to arrive at the most important trading decision. That is whether and where to buy or short, or whether to stand aside to decide the preferred trading direction. Time to combine the insights from the 5 dimensions to arrive at a conclusion. Let's go through them. Dollar index. No insight from there that tells me to be bullish or bearish. Mega cap index. May allow buying if it goes up next week, but not yet. Market breadth. Too many Hindenburg omens that is bearish or at least cautionary enough to avoid buying. Eureka at the top, probably exuberance. 3-month new high. Low nearing extremely overbought level in small mid caps and also in NYSE. Telling us to be cautious about buying the stocks that led to last week's rally, especially if those stocks are already at a very high level. Market external view. If you are fond of breakouts at all-time high, and that is a possible technique. DIA allows buying, so you could look for industrial stocks breaking out. Otherwise, IWM also allows buying using a trend following buy setup, flow setup. Nothing allows shorting. Bucket analysis. Overbought. Sector industry stock breadth, buying is possible. Shorting is not allowed. Lastly, technical breadth. Does not allow shorting yet, though there are overbought stocks, many of them. Buying is allowed in stocks at a lower price level. Combining all of them. Avoid shorting at present. It is possible to look for buying stocks that were underperforming. Probably small cap stocks as IWM has a buy setup, but could be elsewhere too. Review of trade ideas shared earlier on YouTube or X. I regularly share live market analysis and trading ideas on YouTube and X, always before knowing the results. You may subscribe to the YouTube channel Trading Profitably and follow Superior Profit on X to receive the analysis and ideas in real time. In the last market recap, I shared only one trading idea. That was a buying idea on Procter & Gamble PG. You may review the video of last week from my YouTube channel, Trading Profitably, if you wanted to check the analysis based on which I suggested buying PG. How did the stock move? Let's find out. Procter & Gamble PG using weekly daily at a glance template. I chose this stock as a buying idea because at that time it broke out of the weekly trend line resistance, giving a breakout buy setup. At that time, it also broke out of the daily watermark resistance. This week, the stock rallied. You can see from the volume bars that it in fact went up for all the 5 days in a row. Once again, a Q-trade setup that I analyzed and suggested before knowing the results. Ended with a nice profit. You are getting used to it, isn't it? This week's trade ideas. How will we go about looking for a buy candidate today? Let's do it using the live systems today, using a strict top-down analysis. What did we see from the market conclusion? We may buy stocks that were underperforming earlier. Why don't we extend that concept and look for sectors and industries that were underperforming earlier? Or we can say sectors and industries that are accelerating now, and then look for strong fundamental stocks that are at a lower price level. Can you do that using Q? Let's find out. First, I go to the sector scorecard. Sort the sector scorecard based on pace. That shows the acceleration, and I'm going to focus only on the top 2 most accelerating sectors. Select them and look into the underlying industries scorecard. Again, look for the underlying industries that are accelerating. Choose the topmost of them, then drill down into the underlying stocks of these industries. I'm currently doing that on S&P 1500. Look for stocks that were up on Friday and that were fundamentally strong. I'm using this 1-star green button. Fundamentally strong, either in terms of valuation or in terms of earnings growth in the last quarter. I'm left with only 30 stocks. I'm not going to open all these 30 stocks. I will look up from QFinder to find out how many of them have a possible buy setup. One more click. Only 10 stocks have possible buy setups. And I notice, using the pattern column, only one stock has 2 patterns. Not only a trade setup, but two patterns that may be attractive to traders, including to me. One of that is a price extreme low pattern. That is interesting, isn't it? Because I was indeed looking for stocks based on market conclusion that were at a lower price level. We have that price extreme low in this stock, and it also has a bullish indecision cluster, and it has a possible box setup that is a buy setup in a sideways market or a double bottom. The stock is GTM. Time to look at its technicals. GTM? It fell but found support at the long-term watermark in weekly. Created a false downside breakout at that watermark level. Has a bullish indecision cluster and a bull release signal. On Friday, it went up with the parent of all bullish momentum big move. Went up with high volume, and it created a reversal candle. From the D-Force template, you can see that it went up with a large direction force count 4. This is giving a possible double bottom buy setup. Before concluding that, let's look at this stock's one-page scorecard, fundamental scorecard. Fundamental scorecard using QVital. For GTM, it is undervalued that allows buying. It's a profitable company. Earnings per share is positive. Whichever way you look at it, I also like the fact that insiders are buying, and the stock has a short squeeze potential. One thing to be aware of is that it apparently has earnings on 9th February. Today is 8th February, so if you are considering buying the stock, you may either wait for the earnings to be over or, if you are really keen to buy it right now, you could use defined risk option strategies. I would probably go for short put vertical, because that benefits from delta move from volatility crash and also from time decay. A massive 86% of peer stocks went up on Friday. That is bullish. The industry is bullish in itself. And if I look at its relative scorecard, interactive media and services industry, it is one of the most accelerating. It was very weak earlier, but now it is starting to gain momentum. On Friday, the industry went up by a sizable 2.3%. The industry is a turnaround industry. Fundamentals allow buying. This is my trade pick for the week, a buying idea in GTM. At double bottom and weekly, and it's starting to go up with high volume. I don't have any position in GTM. I am aware of its upcoming earnings, considering that if I get a low-risk entry point, I may look to take a long position. I'm not sure if I'll go for that before the earnings or after the earnings. In any case, I'll keep an eye on the stock. If you carry out the 360 degrees analysis using Q, you will most likely find many trading candidates today, just as you would almost every other day. Now that you have seen Q in action, it is over to you to benefit from that. I will end today's session here. I look forward to seeing you in my next session. Have a great day. And as I always say, as the live examples show, there is no reason not to do that. Trade profitably. Thank you.